Hi and welcome to the Market Alert for Monday, the 2nd of June 2025. So stock saw to best May since 1990. Gold gains as dollar dumps to 3-year low. So much for sell in May. Well, I know having gone through this data a few years ago, you get the odd year where you don't get the markets selling off. But then we have a different situation this year, don't we, with these mental tariffs that Trump's trying to implement. And even on Friday, he came out again making an announcement he was going to add another 50% to the steel prices, or make it 50%, I think was what the headline was. But they're so prolific now, these headlines, that the market's just used to them. They just don't take any notice. And the markets are up on the overnight as well. And in the other news, markets chop on month end amid to US data and US-China friction. That's with the metals, again, increasing the tariffs on these. But what was interesting, what I noticed this morning, I don't usually look at the front pages till later on, but Bessent vows US will never default on market data, lays bare investor anxiety. Well, that's what it's trying to do. But if you look down here, you'll see that in the finer print, as it were, just move this over so you can actually see it. US Treasury Secretary Bessent yesterday said that the US would never default on its debt in a bid to assuage investors' mounting concerns about state of American public finances. Well, what do those finances look like? Let's have a look. So I got AI to create a quick chart for me, showing me the interest payments on the debt from 2009 when they started QE to where we are now, and I'd say there was a problem. And no wonder it's time to assuage any concerns about the markets. This is just incredible. So now we're over 1.1 trillion per year in interest on the debt. So at some point it's going to default. But as I keep saying, at the moment they won't allow that. They'll keep printing money. They'll bring back, printing on steroids if need be, to keep this alive and well. So it all goes back to when interest rates shot up because of inflation. And now, because the rates are so high, it was okay when we were here because we were on 0%. But once you get to 4.5%, and as the article says here, that if I can find it, there we go. It says in early April, the 10-year has risen from 4.16 to 4.42, and that's massive. And the dollar has dropped to 4.7% over the year. So you can see there the market, or rather the chart showing that it is a serious problem. But as I keep saying, the Fed have the tools. They can drop interest rates to zero again first, which is what Trump wants. It'll all end badly. It always does. I mean, any fiat currency that's not backed by gold has always failed. But this one, they're really on life support and dragging it out. But they'll keep doing it until they can't do it. So that's what this is all about, is just to bring that sort of reassurance to the markets that we've got full control. We are really, but there you go. Anybody with a brain cell on active duty can see there's a problem there, but they'll just keep pushing it down the road. Economic news items for today. It's Italian bank holiday. We've got ISM manufacturing, and Powell is going to be speaking at 6 p.m. Again, probably to do what Bessent's been speaking of in the Financial Times, just to bring some sort of calm to the markets. What have we got? We've got CPI tomorrow from the Eurozone, ADP. So if it's ADP, that means that we've got non-farm payrolls, which we have this week. And also we've got Thursday, we've got rates being cut by Europe by the looks of things, from 2.4 to 2.15 as well there. So a lot happening this week as far as economic news is concerned, so we should see a bit of volatility as, again, you just wait for Trump to keep making the announcements as well through his own social media platform or on X. Right, let's have a look at the markets for Friday and kick off with the Dow. So on Friday, the market's still stuck in a sideways range and fairly quiet as well. An inside bar, market didn't take out the high of Thursday or the low of Thursday, but showing a bit of weakness there overnight. And as you can see there, not a lot to shout about during Friday, just a choppy session there A lot of buying coming back into the market here to bring prices back up, which they managed to do so. So the high and the low not too far away today for the Dow there. Meanwhile, in the German DAX, it too managing to trade an inside bar as well for Friday. So again, it might be setting a precedent here until we get to the 9th of July, where we'll see the market pick up a bit once Trump's tariffs take effect. But again, inside bar there for Friday, and you can see there we moved up and then we moved down with the Dow, and then overnight prices are just steady. Need to take out the DP and Friday's close and the averages, of course, in order to move higher and get back towards the high there. And in the S&P 500, market sideways to lower, taking out the lower Thursday during Friday's session, but finding support at the 20 bar moving average. And Friday, again, you can see them buying back into the market here as prices had a bit of a shakeout. This must have been the announcement from Trump. It was soon discounted and the market moving back to the upside. But like the other markets at the moment, they need to close back above the DP, the close, and the 20, 50 and 200 MA there. Meanwhile, in the UK, prices again sideways, stuck in a range. It may be a case of sell in May and go away, but the markets haven't really gained an awful lot. The money's been put on going back to April, when, of course, everything was postponed with regards to the tariffs. 30-minute chart for the FT100, not a lot to show there, but again, you can see them buying back in here, with a bit of selling, and then they brought back in. And the market has been steady since then, sitting at the DP, looking a bit stronger and firmer than the other markets. Meanwhile, the US dollar continues to be sideways to lower. As it said in the article, it's lost 4.7% of its value during the last 6 months as we head into June. So let's have a look at the metals prices and see the reaction to this drop. And kicking off with silver, the market is still stuck in a sideways range. The longer the consolidation, the bigger the breakout will be, hopefully to the upside for this market. In the 30-minute chart, usual nonsense on Friday, smackdown, brought back on the Asian markets there towards the 200 MA. Needs to take this out, and prices need to continue to move up towards the high there. Meanwhile, in gold, sideways to higher as well. Looks like it's getting ready to make some sort of a move back to the upside there, to its all-time high of just under 3,500 per ounce. And the 30-minute, again, you've got the Friday nonsense, or the daily nonsense of the LBMA marking prices down. Buying comes in, market's brought back. It just needs to take out the high from Friday there. Right, so a quick look at the gold-silver ratio. And not a lot to report here either. We're back above the 100 level, but prices are currently sideways. So let's have a look at Friday's trades. So during Friday, the market moved higher in the pre-market session, which you can see there, and then tapered off a bit as we got closer to the cash market opening. Prices then stabilize, and then we see prices move higher once you have the shakeout. So prices up back to 100%, double bottom, got the 200 MA there, got support with the psychological level, and then prices continue to move up to the DP, and then through this into the next BRN, well, the next two actually. So you can see the market moving up 100, 200 points, and then having a breather from this point onwards. We had a sell, but that didn't last for long, as the market then tried to make its way back with a potential buy, which failed to be filled, then a sell, which also moved back to the downside without being filled. And then we went into the mid-morning, which you can see there, through to the economic news. Again, this is when I think Trump announced that 50% on the steel tariff with China, and then the market for the afternoon started off with a potential buy. The market reversed and followed the US markets lower down to the DP, where we see the market bounce off this level and then consolidate. It became really quiet as we got past 3 p.m. and then again the signals weren't being filled, and then prices moving back down below the DP, which is a shame because it was a nice move to the downside. and then into the evening as prices then continue to follow the Dow, which we saw, and then also the buying coming back into the US market as well. Let's have a quick look and see where we are overnight, and prices currently just stuck in a bit of a range. Let's just squeeze the chart up, see where we are with the low, which is not that far away. It's about 60 points, 70 points, and then you've got the DP above this level at the moment. Price is currently below the 200 MA as well, showing a bit of weakness there. So let's see what happens today. It may be selling may go away. We are now in June, but I would expect the markets to show a bit more of this sideways move in quite a decent range, but until we get these confirmed tariffs on July the 9th, and it's also, we're going into summer as well, where a lot of traders obviously have breaks as well and take advantage of that, probably before we get the reintroduction of these postponed tariffs on the 9th of July. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.